Accounting for inventories. This is the topic that is discussed in detail in IAS 2, International Accounting Standard number 2. So we will be discussing few important definitions from the standard. We know that inventory is an asset. Okay. This inventory is held either for ordinary course of sales purposes, or it is held in the process of production of such sales. Okay. Or this inventory is an asset which is held in the form of material or supplies, okay, which will be consumed during the process of production or rendering of services as well. So inventory is an asset. Okay. Well, the other definition which is very important to understand in this accounting for inventories is net realizable value, because we will learn an accounting policy on it that inventory is measured at lower of cost and net realizable value. Anyways, we will discuss this in detail in the upcoming module. But what is net realizable value? Net realizable value means the price, the estimated price, obviously, at which this inventory can be sold in ordinary course of business, less the estimated cost of completion and the estimated cost necessary to make such sales. This gives us net realizable value. See, it is not realizable value only, it is net realizable value. That's why we are subtracting two costs from the estimated selling price. One is the estimated cost of completion of that inventory, and the second one is the estimated cost to make such sale. Look, what is the estimated cost of completion? The thing is that we have inventory with us which is work in process as well. So the work in process inventory, which is in fact semi-finished inventory and which will be semi-finished or which will be in the process at any percentage of the stage of completion. So we cannot get that percentage of stage of completion, the selling price for that stage of percentage of completion in the market, because market will always give us the selling price of the finished product. Okay. Supposedly there is a table, we are manufacturing a table and which is 50% complete. So the market will not tell us the price of 50% finished table, or a table which is 75% complete. Market will not tell us the price which is 70% complete for the table. Market will always tell us the price for the table which is 100% finished. So what we will do, we will take that estimated selling price from the market and then we will subtract the cost of completion. Supposedly if that table is 75% complete, so we will subtract 25% cost of completion from the estimated selling price. Got it? And then we will get the net realizable value, obviously after subtracting the cost to make such sale. This cost to make such sale is in fact the selling expense to make those sales happen. The thing is that all these are estimated costs or estimated selling price. The inventory is with us in our store or in our warehouse. We are just estimating that how much we will be able to realize if this inventory is sold in the market. Okay. So the important tips to remember in this module are that inventories are asset. Mostly people get confused. Inventories are expenses. No, inventories are assets. Okay. The next thing is that materials or supplies include the production supply, the office supply, and the shipping supplies. So this is the inventory of material or supplies. All right. All the details about accounting for inventories will be coming in the upcoming modules. So your attentions would be required over there as well. Thank you.